Couldn't help yourself, could you?
I couldn't help myself. No, sorry, Steve. Good morning,
How
everybody.
Doing, morning, everyone.
I'm good, thank you. How are you, Steve?
Yeah, pretty good, thanks.
Excellent. Okay, thanks for joining us today. It's the 4th of July. Happy Independence Day to any Americans who I'm sure won't be watching because they're on their holidays today. But we're going to still run the show as usual, go through all the latest headlines. We are expecting a quieter day in the markets today because of the lack of liquidity that will be in the markets due to this US holiday. So first up, let's get into the headlines and then we can move on to taking a look at some charts. So the Bundesbank continue to stay hawkish. This is a consistent theme that we're seeing across most of the central banks at the moment. The head Nagel stated that inflation is not retreating as the bank would like, and there is still some way to go in policy tightening. He did, however, add that doubts surrounding the need for further rate hikes will grow, and that critical voices are becoming louder. The US manufacturing number stayed in recession yesterday. The ISM index declined to 46 for June from 46.9 previously, below the expectations of 47.2. This is also the lowest reading since June 2020, which was really when coronavirus was biting the economy. Production slipped into contraction for the month, while new orders contracted for the 10th successive month, and prices remained in contraction across the board and posted the sharpest declines in 6 months. Markets therefore still expect the Fed to hike rates in July. There is no change in the expectation despite the weaker numbers. There is an 85% chance that rates will be hiked according to the Fed funds futures, but that dipped slightly just to below 20%, so an even higher conviction, just a little bit lower conviction, maybe a little bit of doubt creeping in there. There's also steeper yield curve inversion as longer term yields moved lower. The inversion between the 2-year and the 10-year yield hit its highest level since 1981 as markets were concerned over recession. We did see some inflation declines in Switzerland. The number increased 0.1% for June compared with the consensus forecast of 0.2%. The inflation rate has therefore dipped to below the National Bank target of 2%. So the Swiss have got it nailed by the looks of things. The RBA overnight held interest rates at 4.1% at the latest policy meeting. Markets were split over the decision, with a slight majority in favour of no change. And as we mentioned today, it is a US markets holiday close for the Independence Day holiday, and that will curb trading volumes with a lack of liquidity. So let's take a look at some charts. Obviously, we know the crypto markets never sleep. So Steve, do you want to kick us off with a look at those, and we'll check out how they're faring at the moment. Still looking pretty bullish overall, I would assume.
Yeah, still looking quite decent on the. I would take a look at Bitcoin first. Obviously, we had a really decent week a couple of weeks ago when there's talk of Bitcoin ETFs being created by some of the major investment houses, including BlackRock, and this bullish sentiment hasn't sort of like dissipated at all yet. We are trading at some really decent resistance levels. Our resistance levels sort of range between 31,000 and 32,500. This is from price action from sort of like over the last few years, actually. So some long-term levels being thrown into there. We have had this rally up, as you can see on the daily chart. Momentum has stalled as we've approached this resistance level. There's an inverse head and shoulders among the charts as well, which highlights a measured move target around about 35,000. So we've still got a little bit more on the upside potentially on this. Support, I would say, comes in around about the 29,500 level in Bitcoin. So I think you're okay unless that breaks. So keep an eye on that. And at the moment, just pushing towards that 31,500 resistance. XRP hasn't really sort of done the job that we all expected. You know, things are progressing from the adoption side of things with cryptocurrencies, XRP, Ripple, SEC case still very much in the news headlines, but it's still sort of like languishing around this 50-cent level. Support really now is comes in around 45 cents and resistance between 56 and 58.5 cents. But yeah, just had a little bit of a lift over the last few days, but compared with what's gone on in Bitcoin or the other altcoins, hasn't really sort of like improved as much as you would have expected. Taking a look at gold, that's been very much rallying since support. The last like 3 days of price action has been mildly positive. We got down to 1893 on the downside, and since then we've started pushing up in towards this resistance level, which comes in around about 1935, trading 1927 at the moment. Obviously, a lot of dollar influence here. If we have a quick look at the dollar before Joe dives into it, we can see that Friday's price action was negative, bearish outside candle posted there. So it's been a bit under pressure since sort of hitting those highs at 103.54 and then pulling back. So that's pulling back. Gold mildly supported, I suppose. We got a MACD down here. You can see it's crossing over today. So maybe that'll give a little bit more, lend a little bit more support to gold prices. Support really coming in, if we're looking at levels, probably around yesterday's low 1910. That's the one to look out for. Today's low's 1920. So keep an eye on those levels if it does pull back. But 1935, as I say, probably the main resistance level to watch. Crude oil, that's had a similar sort of rally as the dollar's taken a little bit of a pullback. We've reacted from that $67 support level over the last week and pushed higher again today. Resistance for us coming in around about that 74 to 74.60 level above. And yeah, price action again, like from a momentum perspective, just picking up a little bit to the upside. That's about it on the commodities, unless anyone's asked for something different. But Joe could take a look at the FX in a little bit more detail now before I dive into indices.
Sure, thanks, Steve. Okay, let's take a look at the dollar index to start with then, and not really a lot going on here. So we can see prices kind of a bit range bound of late. We did find support at 102.23. Posted a bit of an engulfing candle on Friday. Yesterday was very undecided, posting a doji candle, and today we've got similar sort of thing, very small range, as you'd expect because of this US holiday. So not a lot going on here and not a lot likely to go on really for the rest of the day. So pretty boring on the dollar index front for now. In terms of overall direction, maybe a bit of upside impetus towards this resistance at 104.20, but on the downside, looks as though there's still support around 102.23. Looking at euro US dollar, not expecting a lot here either. So following the break of the channel, we saw this corrective move lower, then a move to the upside, found resistance around 109.42. Prices pretty choppy and range bound in the short term. Support at 108.44. While above that, still potential for prices to maybe continue wanting to move higher. A break below that could trigger a move down towards 106.40. But for now, a bit undecided. Yesterday we posted a doji. Today we may well see the same thing. Looking at cable. So we broke through resistance here, this big red line dating back to the highs that we saw in May 22. That was at 126.66. The retest of that level didn't quite hold. but the trend line support did, and we saw a decent reaction from that level with prices pushing higher. Yesterday we posted some green. Today we're posting some green as well, but the ranges on these candles are pretty small. And without much influence from the dollar today, we may continue to see this grind higher in line with the dominant trend that's established itself. So all in all, still looking pretty bullish on cable. Let's just take a look at some of the commodity currencies, see how they're shaping up. Pretty choppy stuff on Aussie versus the US dollar. Saw a big move to the upside and a big move to the downside. And in the last 4 days, we've seen prices continue to move to the upside. All in all, bit directionless in the short term. I imagine the same on New Zealand dollar versus US dollar. Up today, 0.3%. But again, pretty choppy, no real clear direction there, and pretty difficult trading conditions. Let's take a look at dollar yen. That continues to grind higher. So went through that 61.8% fib level with relative ease. We have come into some resistance here, some previous lows dating back to November and October last year. That comes in at 145.10. Seen a bit of maybe profit taking at that level. We can see a bearish engulfing candle formed here on Friday. We backed that up with some further gains yesterday, but a bit of indecision today. So a bit of resistance here that we need to contend with. If prices can get above that, then there's no reason why we won't continue to see this move higher towards that 78.6% fib level, which is at 146.65. What's going on with dollar Swiss? Anything there? Not an awful lot. Pretty tight ranges, kind of grinding lower in line with the dominant trend there, so no real change. And dollar CAD. So this was trading in a bit of a range. We saw a breakdown through that range in mid-June. Prices then attempted to move higher. Yes, we've overcome that resistance a bit, but last few days we've not seen any follow through to the upside. So again, pretty difficult conditions all around really in FX at the minute, unless you're trading these yen pairs, which just because we're seeing such yen weakness, these are really the only places you're going to get any kind of definitive trend. But given that they've moved higher quite dramatically, I imagine there's probably a bit of skepticism about continuing to buy these for fear that there may be some sort of intervention or play from the Japanese at some point to change the outlook here. But certainly, if we look at sterling yen, look at euro yen, same sort of picture, big upward moves following consistent and persistent yen weakness. Over to you, Steve. Let's take a look at these indices.
Lovely, thanks, mate. Yeah, let me just thanks, Joe. Looking at the indices, really, we had a little bit of a stall yesterday. Looking pretty positive last week. Had a little bit of a reaction higher. This is the DAX, for instance. Got that big level of resistance up here that price action is trying to push through. Had a bit of a failed attempt. Failed attempt a couple of weeks ago, but pulled back really strongly last week. However, this week or yesterday's price action slightly negative. Look at the daily chart, you can see that sort of like bearish, not quite a bearish dark cloud cover, but that sort of price action opened up higher and pulled back into Friday's range. Nothing really going on this morning. We've had a little bit of a sell-off earlier up until between 7 and 8 o'clock, and then we've found a bit of support at this Ichimoku cloud. This could be one that sort of like could be a nice level to fade these indices at while the US are off, but on the same sort of like token, we could get a really sort of like a strong, if we do get a strong sort of like buying from the European markets, then we there wouldn't be as much resistance maybe coming from the US. Normally the US for me is always the one that sort of like kicks off that buying spree. If it doesn't get it today, maybe we'll sort of like settle down a little bit. I don't know. We'll see how it plays out. Don't want to get too carried away too quickly. But again, on the 4-hour chart, we saw the Ichimoku cloud top do a bit of a support for that Germany 40. EU 50, similar sort of price action really. We had this indecisive candle yesterday. Again, made us, well, looks like quite a decent high there. Yeah, took out that 44.15 level, which is all-time highs. So we hit an all-time high yesterday in EU 50. Now, pretty interesting, especially in this sort of like hawkish rate environment. I'm still scratching my head. Still doesn't make sense to me. So for me, this feels like a good opportunity to fade this. You're not going to hit it every time, obviously, in this sort of like this grind higher, but good upside if you do catch that break and your timing is right. But maybe not today. Sort of seen in the last hour, this sort of like quite strong rebound from the retest of the Ichimoku cloud on the hourly chart. So not sure whether maybe stand in the way, maybe fade it if it gets up to 44.20, but not in the sort of like in no man's land. Take a look at Dow again. That's sort of like nice little rally higher. It didn't quite get up to the highs of the 16th of June. That was 34,558. But we're sort of like making that attempt today. Momentum does seem to be stalling ever so slightly from yesterday's price action, but still early in the week, and we have got obviously not a lot of interest because of the US holiday. Price action in Nasdaq. The all-time high sitting there 15,300, just below there, and we're sort of looking like we're going to test it again. And the S&P just sort of continues to sort of like crack on higher. Was I wrong there in saying, yeah, Nasdaq is not an all-time high, but it is quite a significant high. You can see going all the way back to February 22 and March 22 last year, and really sort of having a bit of an attempt at it now. Don't know, Joe, it does feel a little bit I don't know, scary in the old indices. I just can't see why they're up here, but they are. We've just got to deal with it. S&P, just onto there. That's taken out the sort of most recent high from the 16th of June. Plenty more levels to watch above. You can see the price action. We're getting to levels we haven't seen since April 22 last year. Yeah, that's about it. Gun to head's going to be a tricky one today, Joe.
Yeah, it's been tricky all year, Steve, to be fair. So just for those who are catching up or new here, Steve and I participate in a little challenge where we both pick trade ideas on the video on a live account. A couple of basic rules. Obviously, we must have stops and targets on these ideas. We need to have some sort of exit strategy, and that's predefined before we get into these trades. The risk reward ratio on these ideas must be 2 to 1 or better. So for every £1 that we risk on a trade basis, we're looking to make at least 2. The trade ideas are closed at 9 p.m. unless the stops or the targets are reached, and we risk 1% of our trading capital per trade. So the last trades that we did were Friday, were they, or Thursday?
Friday. One loser, one winner. We lost 18.20 on my gold trade idea where I went short, and we made 17.26, so pretty flat on your New Zealand dollar yen trade idea, Joe. So 17.81, just above our all-time low, our worst drawdown. But we go again. We're still sort of in the game. We've had a pretty poor run, but a week of decent trade ideas, and we're back on track, I think. So
yeah, I mean,
it will come
before.
but
our profits tend to come in clusters whereby we're just kind of in tune, things are working. And don't forget, most of this we're looking at from a technical basis on a very short-term interval. So this is obviously, very difficult. It's very difficult to sort of play, hugely established trends because you can get big moves either way. And markets, I don't know, it's just been really strange time, I think, in some of these currencies. I'm not sure if anybody else is seeing the same thing. Please feel free to comment up if you're having a spectacular run at the minute on markets. Let us know what you're doing, because we're struggling to find any real kind of consistency in our approach. But what we will do is continue to stick to the same sort of methods, still be very strict with our risk management in how much we risk per trade and the sort of trade setups that we look for, in the hope that eventually we do go through that purple patch where everything works. And we've seen it many times in the past, and confident that we'll see it again at some point. Anything standing out for you? I've got one semi-ready if you want to.
Yeah, you go for it, mate. If you've got one ready, go for it. It might give me some inspiration.
Okay, so currency-wise, obviously, dollar being a major influence in the currency markets, there's no impact from that today because of the holiday. So this is New Zealand dollar, Canadian dollar. On the daily chart, so we can see here there is a pretty consistent downtrend in place, many touch points along this downtrend line. This bottom of the sort of channel isn't exact because it's not parallel. If it were, it were to be somewhere around there, which cuts through a lot of that price action. So maybe just ignore that for the time being. We can see there's been some support found here at 80.41, potentially a double bottom forming if it can break through resistance up here at 82.62. But for me, the overall trend certainly remains bearish. Yes, there is some support here, but going with the overall trend, I am believing that there will be lower prices at some point. So taking a look at the intraday charts, just looking at a very small time frame here. This is an hourly chart. So going back to these swing highs that we posted on the 14th of June, we can see it was a pretty decent move to the downside. If we draw some fib levels on here, we can see there's a 50% fib level just around current price 81.61. So it's above that at the moment. But I've also got a sort of bespoke resistance level in here at 81.71. I think what was attracting me most, and it's not necessarily the case now, but in the last sort of couple of minutes when I was looking at this candle was looking pretty scary from a reversal perspective, suggesting that we may see a bit of a reversal following this sharp move to the upside. So because I've got nothing else, I'm going to stick with it. And it's just made my stop loss just that bit tighter, and therefore my risk reward a little bit more attractive. So I'm going to get this on. I'd like to sell at 81.68, which is where it's trading at the moment, with a stop loss at 81.90.
Yeah.
And a target at 80.88.
3.42 to 1, Joe. We got that on it.
So that's a move into that high there from the 29th of June. So looking for a retest of that. So that's my preferred setup today. Slim pickings, I think, but yeah, we'll see how that goes. I like the risk reward on that. Let's see how it plays out. Over to you, Steve.
Cheers, Joe. Yeah, I'm sort of going to go. Yeah, I'm going to go with. I'm not sure now, Joe. You have sort of like thrown me a bit. I was looking at dollar CAD, but like you say, I'm sort of like into these yen pairs look quite interesting. Let's take a look at gold, see what gold's up to. We have got resistance just above. We've got the dollar on the back foot. Got decent resistance up here. We've had this quite nice impulsive move higher. And I'd really like to sell into the resistance here. Let's take a look at oil quickly. We've got oil inventories out tomorrow. Do you want to get involved in that? Not so sure. And you got these sort of like the indices sort of like near them sort of quite significant highs. What's this one? This one's had a little bit of a turnaround.
Good old Euro Swiss.
Good old Euro Swiss. Let's go for Euro Swiss. We talked about this the other day about yeah, I mean you said we talked about this like the Swiss sort of like getting a sort of on top of that inflation animal at the moment. So
yeah, let's
get involved here. Looking at this price action stall just after breaking through that cloud support. That's this is quite a positive candle, inverted hammer candle. And we've had a nice little reaction higher, so we can put the stop can be pretty tight on this 97 below 97.70. We're trading 97.75, so not looking for huge moves in here in this sort of market. So we want to buy at market, we want to risk 1%. We want to sort of have the stop quite tight, so we have it 97.65, so not far away, and targeting a move to up towards the 98 level. Gives us a bit of a 2-to-1 risk reward. Let's get on that, shall we? Yeah, looking for a little bit of a rebound on that, back up to like trade the range, let's say. So yeah, getting long of Euro Swiss on there.
Okay. Good luck. So data-wise today, obviously US market holiday, so nothing really for us to be concerned about from a data perspective, and that will only just sap more volatility from the market. Events for the rest of the week, so straight back in tomorrow with Federal Reserve minutes. Then on the 6th, we've got the US ISM non-manufacturing plus the jobs opening report. Then Friday, we've got non-farm payroll. So a bit of a breather today ahead of a little bit more exciting market action for the rest of the week. So I guess take the time to relax, chill out, and maybe not stress so much about your accounts today. Yeah, I think that's pretty much it from us, Steve.
Yep, that is. Thanks a lot for joining us, and look forward to catching up again when we can.
Yeah, indeed. Have a good one.
Cheers.
Bye-bye.